tax amnesty bill and a review of the value-added tax on electricity. And the implementing rules for a new law that extends land lease terms for foreign investors have been finalized. We begin with this developing story. Just this morning, Commissioner Rosana Fajardo has resigned from the Independent Commission for Infrastructure effective December 31st. In a statement this morning, Fajardo explains that she has already completed the work she has set out to do, providing recommendations to improve government procurement and budgeting processes related to infrastructure projects. Fajardo now anticipates that the investigation will transition to other agencies such as the Department of Justice and the Office of the Ombudsman, which she says are better positioned to hold officials accountable. She adds that a permanent commission will be more effective in supporting the Ombudsman in prosecuting culprits in the corruption scandal, with Congress deliberating bills for an independent People's Commission. President Marcos tapped Fajardo in September to be part of the ICI to follow the trail of public funds and determine where irregularities have occurred. She is the country managing partner of SGV & Co., a certified public accountant with over 3 decades in experience. Fajardo becomes the third ICI official to resign since its formation in September. Mayor Benjamin Magalong stepped down as special advisor just 2 weeks into the ICI's operations, while former DPWH Chief Rogelio Singson relinquished his post as commissioner on December 15th. Business groups have laid out their tax wish lists for the new year, which includes a general tax amnesty and a review of VAT on electricity. The British Chamber of Commerce of the Philippines bats for the passage of the General Tax Amnesty, granting a one-time reprieve on unpaid internal revenue taxes for 2024 and prior years. Bills like this come from Senator Win Gatchalian, have been filed in the House and the Senate but are still pending on the committee level. BCCP Executive Chair Chris Nelson tells Business World that this will give taxpayers with outstanding liabilities a path to move forward amicably. The European Chamber of Commerce of the Philippines also backs that proposal, which will broaden the tax base and encourage voluntary compliance. Other groups want to review the VAT on electricity. Lawmakers such as One Tahanan Party List Congressman Nathaniel Oducado calls for the VAT on power bills to be slashed from 12 to 6%. Philippine Exporters Confederation Incorporated President Sergio Ortiz Luis tells Business World that it is high time to scrap power taxes to make electricity more affordable. Philippine Chamber of Commerce and Industry Chief Enunina Manjo also backs the review, as electricity rates have a direct effect on inflation, household spending, and business costs. And the government has finalized the implementing rules and regulations, or the IRR, for a new law extending land lease terms for foreign investors. The Board of Investments has signed the IRR for Republic Act 12252, which amends the 32-year-old Investors' Lease Act. That measure, signed into law 3 months ago, allows foreign investors to lease private land for up to 99 years from the previous 75-year limit. Trade Secretary and BOI Chair Cristina Roque said the reform provides long-term security from investors, or for investors rather, and supports the push to make the Philippines more competitive and business-friendly. Now, under the new rules, lease contracts must be annotated on land titles and registered with the Registry of Deeds. That is to strengthen transparency and legal protection for both landowners and investors. The agency said the updated framework is expected to attract sustained capital, technology, and global expertise, while also simplifying compliance and reducing red tape. In other news, the Bangko Sentral may cut large banks' reserve requirement ratio by up to 200 basis points next year to help support weak economic growth. Security bank's Angelo Taninco told Business World the BSP could implement a 200 basis point RRR cut as early as the first quarter. If realized, the requirement for universal and commercial banks would fall to 3 from 5%. The central bank has so far reduced large banks' RRR by 450 basis points since October of 2024. BSP Governor Eli Remolona said the central bank remains open to further cuts, possibly to 2%, but is not rushing due to ample liquidity. RCBC Chief Economist Michael Ricafort stressed that every 100 basis point cut releases about 180 billion pesos into the financial system. He said lower lending rates and more loanable funds could boost credit demand, economic activity, and overall growth. Meanwhile, Jonathan Ravelas of Reyes, Tacandong and Goes said a phased 100 to 200 basis point cut in early 2026 could aid growth, but warned that liquidity alone cannot fix structural issues. PIDS Senior Research Fellow John Paulo Rivera said an RRR cut can support credit and growth, but may add to inflation and foreign exchange pressures if timed poorly. Now, the EDSA rehabilitation project started in earnest on Christmas Eve in some areas in Pasay and Makati, with more lane closures scheduled starting Sunday. Workers began concrete reblocking on two innermost northbound and southbound lanes from Rojas Boulevard to Taft Avenue and from Guadalupe to Orense in Makati City. There is some buildup in the northbound lane approaching Pasay Rotonda due to traffic lights, causing some drivers to get irritated.
Nako, napaka-traffic. Dapat di tinatapat sa season tong ganito eh.
Kailan dapat pa ko?
Dapat yung mga Sunday ng gabi gano'n, hindi ganitong oras. Napaka-traffic eh.
Sobrang traffic po, parang mali, wrong timing.
Panahon na magbungkal, ito pang season na holiday. Ang tao na mamasyal, gagawa talaga ng dahilan. Yung traffic lang.
Grabe traffic! Dapat ipatigil na ito muna ng engineer. Lagpas na bagong taon. Grabe traffic! Mahal naming presidente, ipatigil mo na to. Grabe traffic! Lugi kami sa hanap buhay namin.
This is phase 1 of the shortened EDSA rehab, which will be carried out round the clock until January 5th, taking advantage of the holiday season. Now, after January 5, roadworks will take place lane by lane from 10 p.m. to 4 a.m. The DPWH released a schedule of repair works along EDSA from December 28 to January 5. Authorities will close the southbound lane from EDSA Corner Taft Avenue to FB Harrison, as well as the northbound lane from Rojas Boulevard to Sergeant Mariano. Also closed for reblocking works are the southbound lane from Home Expo Building Depot to P. Cele Street and the northbound lane from Park Avenue to the inner lane of Orense. The southbound lane along Ayala Underpass exit near San Lorenzo Village will also undergo reblocking works. For the complete list of EDSA portions undergoing reblocking and asphalt overlay activities, please visit the DPWH NCR's Facebook page. The Social Welfare Department is pushing to expand key social programs, including increasing the number of senior citizens receiving monthly pensions and children covered by feeding programs. Mobile Journal Julie Baiza reports.
The Department of Social Welfare and Development admitted that the agency has faced several challenges in implementing its programs. Included among this is maintaining a clean list and ensuring the validity of beneficiaries of social programs.
Of course, it remains to be a challenge, but sa amin kasi opportunity iyan eh. Opportunity para po mas pabutihin pa yung pag-maintain namin ng database at tiyakin na malinis ito at laging na-validate ng ating pong mga field personnel. So again, mahalaga na regularly ma-update natin yung ating pong database of beneficiaries because that will really inform our actions and even our decisions in terms of implementing social policies, social protection policies and programs.
There is also the problem of delivering assistance to geographically isolated and disadvantaged areas or remote locations. According to Dumlao, coordination with other government agencies is important to ensure the availability of necessary infrastructure. At the same time, the DSWD reported on the programs implemented in accordance with the directive of President Bongbong Marcos. So far, 4 million indigent senior citizens have been receiving a 1,000 peso monthly social pension. This number is targeted to increase in the coming year. The supplemental feeding program also continues.
Yung foundational period talaga ng mga bata ay mahalaga na ma-provide natin yung kanilang pangangailangan o ma-meet natin yung kanilang nutritional requirements so that when they grow older ay hindi naman sila maka-experience ng mga health conditions na makakasama o that would be detrimental to their growth and development.
For 2026, the target is to increase this to 1.8 million from the current 1.5 million children being assisted under the feeding program. Lastly, the Walang Gutom program will also continue, which provides 3,000 pesos worth of food credits to beneficiaries. At present, the program has 600,000 families or food beneficiaries. Kapatid Mobile Journal Julie Baiza, We're One News.
You are watching Money Talks. Now coming up. The country's trade deficit narrows in November. And the banking sector's continued strength is said to help support economic activity. Keep it here on One News. Welcome back to Money Talks. The Philippine Statistics Authority reports the country's trade deficit narrowed to $3.5 billion in the month of November. This marks a nearly 29% decline from the same month of last year. Preliminary data showed exports rose by around 21%, led by electronic products. Imports, meanwhile, fell by 2%, driven mainly by lower shipments of metalliferous ores and metal scrap. Hong Kong emerged as the Philippines' top export destination for the month, while China remained the leading source of imports. The Bangko Sentral says the Philippine banking sector's continued strength could help support economic activity that's despite near-term growth headwinds. This comes as governance issues linked to the corruption scandal continues to weigh on sentiment. In a report, the BSP said bank assets and deposits continue to grow, showing the sector's resilience. As of October, total banking assets rose by over 7% year-on-year to 28 trillion pesos, supported by loans, deposits, and investments. Deposits likewise climbed to 7% to 20 trillion, signaling steady confidence. Analysts said the growth reflects stable lending to households and businesses, as well as strong holdings of government securities. The BSP said banks maintain sound asset quality and capital buffers, with lending continuing to support economic activity even as loan growth moderates. U.S. markets got a boost on Christmas Eve. That's after Apple CEO Tim Cook bought $2.9 million of shares from Nike, where he serves as a board member. The Dow rose by 0.6%, notching its 19th record of the year. The S&P jumped by 0.33%, posting its 39th record close, and the Nasdaq gained by 0.2%. Markets were closed yesterday for Christmas and will resume trading later today, Manila time. U.S. 10-year Treasury yields ticked down to 4.133%, while gold prices settled lower on Wednesday to close at $4,480 per ounce. Stock futures are little changed in after-hours trading. The Dow, the S&P, and the Nasdaq are all up by about 0.1%. Asian markets are trading in positive territory this Friday. South Korea's Kospi is up by 0.6%, and Japan's Nikkei is gaining around 0.8%. Meanwhile, trading in Australia is on pause for the Boxing Day holiday, one of the country's biggest annual shopping events. Now let's take a look at our own markets on the penultimate trading day of the year. The PSEI opens this Friday higher by about 0.25% at 6058.60. Analysts forecast stocks will hold above the 6,000 level amid thin holiday trades and caution over 2026 prospects. As for the Philippine peso, it opens today stronger at 58.75 to the US dollar. Traders expect the local unit to consolidate at the 58 peso level as trading winds down amid the holidays. And we are still digesting Noche Buena and Christmas ham, but markets are back in action today and here to take stock of what is driving global trade and the local economy on these final trading days of 2026. We have with us Matt Ereze, economist at Oikonomia Advisory and Research Incorporated. Good morning, Matt. Welcome to the program.
Good morning and Merry Christmas as well to everyone.
Merry Christmas and thanks for joining us. I'm sure you're still recovering from the holidays as all of us. And there's a lot to take stock of here because we have so many things to be talking about before the year ends. Trading never stops. Let's kick off with some global issues. No, we had quite a rough year when it comes to global trade, tariffs, all of that. But why is it that whenever we look at particularly US stocks, no, they are still up? The economy there seems very strong despite the fact that Trump has slapped tariffs on everyone. Nobody's really happy. Can you please explain this in a nutshell, in simple terms? How is the US economy still strong? How are US markets still strong?
Okay, so despite all the political issues, despite all of that tug of war on tariff rates, we can see a lot of bullish sentiment when it comes to tech stocks, especially during this AI age or AI revolution. Because most tech stocks, especially the big ones, Nvidia and all of them, comprise most of Nasdaq. And we can see that share prices are still up, earnings are still beating expectations. Therefore, global markets, especially Nasdaq and major stock indices, are still up despite all of these political headwinds.
Okay, so a lot of tech stocks still cushioning the trade issue blow. We have some analysts saying that the pain of the tariffs that Trump put in place this past year will be felt next year. Do you agree with that pronouncement? And if so, what's going to be the outlook for the global economy in 2026?
Yep. I also heard a lot of analysts expecting that inflation in the US will go up because of the additional taxes imposed on goods. But we can still see some of the firms absorbing some of that increased costs when it comes to tariffs, as well as some relaxing or postponements in tariffs. But then the lagged effects will probably start next year, especially once these costs are passed on to final consumers.
What about the Philippines? For a long time, we've been, let's say, isolated or cushioned from all of these trade issues. Are we going to start feeling the pinch next year?
I think the sentiment that we are isolated from all these trade tensions is because most of our economy is driven by domestic activities based on household spending, government spending, and all the other local activities that we have here. But when it comes to our trade sector, that will start to become something to worry about. But then there's another factor that we must also factor in when it comes to our trade performance, and that will be exchange rates. Despite all of the, gloomy sentiments that the peso is weakening against the dollar. That may even be helpful in improving
Okay.
our export sector. That could help us maybe steer during this very rough trade environment.
Okay, so the weak peso is actually helping us when it comes to export. But let's talk about what you mentioned, the domestic consumption and the domestic economy. The Bangko Sentral has just mentioned that it sees us rebounding from the lowest that we've seen, I mean, in several, semesters, several years, the 4% print in the third quarter. We will be rebounding by 2026 later on pa. And then targets from 2027. How will this affect market sentiment? And can you comment on the BSP's pronouncement?
I'd also like to commend the BSP because all of their consistency when it comes to monetary policy, when it comes to propping up the local economy, has been all good moves. However, we can still see that the looming or the strong corruption scandal is still the heaviest weight that is pulling down the Philippine economy, especially during the last quarter wherein we see just 4%. That is mainly driven by the huge decline when it comes to government spending. And despite all of the easing moves by the BSP, which started late last year up to now, that could only do so much. We still have to see some reforms or at least some positive moves when it comes to fiscal policy in order to fully realize that expected rebound in 2026.
Let's talk about the easing of the Bangko Sentral. You mentioned that this isn't enough and they're going to be, I mean, a lot of analysts are expecting another 200 basis points for the triple R, so from 5% to 3%. Some are saying we don't need that, we can't absorb this extra liquidity. Is there still a point for us to be slashing triple R rates, to be slashing interest rates? We've already gone down to 4.5%. Do we still need it lower and more eased?
We still have a lot of headroom when it comes to monetary policy easing. And that is mainly driven by lower than expected inflation, even lower than our targets of 2 to 4%. I expect inflation for the year to be around 1.7 to 1.8, which gives us a lot of headroom when it comes to monetary policy. But then that could only do so much. Investments will probably increase. The local stocks would benefit from these moves. But then the overall GDP growth will still need a lot of help, especially from the fiscal sector.
Can you tell us what help we need? So there's already some transparency hopefully happening in this corruption scandal, diba? You also have the budget. We're waiting to see whether the budget will be approved or reenacted in the first week of 2026. Where are the risks tilted to when it comes to our growth? Upside, downside, and what are the catalysts we need?
The basics of fiscal policy mainly stems from either cutting or controlling taxes and also in controlling spending. When it comes to taxes, we can see a lot of sectors wishing for some relaxation on taxes, some amnesties, and even some reviews on the VAT, which are all positive moves that could be detrimental when it comes to the tax base, but on the overall economy, if that extra income, that extra disposable income could be used to do a lot more activities, that would become more helpful. Then when it comes to spending, that is where we should see a lot more improvement or a lot more deliberate action from, especially when it comes to the budget for next year. If we can see that the budget is positive towards more spending, especially on productive sectors, and hopefully that could be used the right way or in its intended way, that would be the positive catalyst that is needed to see better growth for 2026.
Matt, looking at the economic numbers, do you see or where do you see that investors are worried about this corruption issue? Are they really, or are they more looking at the domestic consumption story, the strength of the economy next year? Are they really, is this such a big concern for foreign investors, you think?
First of all, it definitely is a factor, but it isn't a major one.
Okay.
Number one, it's because the business fundamentals are still strong. companies are still earning well and they post a lot good dividends this year, which are all helpful when it comes to valuation and hype or sentiment when it comes to the local stock market. And apart from that, when it comes to GDP growth, investment isn't the major driver. It's still domestic consumption and also government spending. So for household spending, we can see probably a recovery, especially because of the holiday season, which can help in making the economy improve or at least have a better numbers. But government spending would be the controlling factor, which hopefully improves when it comes next year.
And finally, favorite sectors, shining spots in the economy for 2026?
Okay. I think the financial sector would be the one that would receive a lot of support from the central bank, especially because we can see that GDP growth is faltering, but we need more budget or at least relaxing the monetary system in order to fuel more activities for next year. So we can see a lot more activities or lending activities from the financial sector.
All right, so just in time, as we reported that the banking sector remains strong. Thank you so much for those insights, Matt Erese, economist at Oikonomia Advisory and Research.
Thank you.
And in other news, power distributor Meralco says it is expanding its microgrid rollout as it moves towards full electrification of Isla Verde in Batangas. The company plans to deploy a sustainable hybrid microgrid system on the island in support of the government's total electrification program. Meralco has recently secured approval for a full-scale microgrid project in Cagbalete Island featuring solar power and backup diesel generation. The company says strong regulatory support will be key to scaling similar projects across other off-grid and underserved communities. And before we go, Manila's finest earns praise from moviegoers on the opening day of the Metro Manila Film Festival on Christmas Day. Audiences have lauded the film for its timely and relevant theme. They also commended the powerful performances of the cast with particular praise for Cedric Juan and Piolo Pascual. Manila's Finest is now showing in cinemas nationwide. The film is produced by MQuest Ventures, Spring Films, and Signal.
I think it's one of the most important things na ipalabas, makita ng mga kabataan yung panahon. To look back, ano yung mga pwede nating makita before, yung experiences na maybe may matutunan tayo mula doon.
We should stand for the truth, for justice, and for righteousness.
That's it for Money Talk. Sitting in for Cathy Yang, I'm Danny Laurel. Catch us again on Monday at 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great day.